500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hey everybody, and welcome to another TrendSpider technical analysis series video. In this video, I'm going to share 5 powerful scanners that you can use to find a bunch of different types of day trading setups. I'll explain what the scanner is looking for, how to script the conditions, and how to plan your entries and exits. In addition, this video comes with an accompanying blog, which contains links to all of the scanners that you can load into your account and use on your own. Let's jump into it. The first scanner we're going to dig into today is called the 821 EMA Cross Scan. As the name suggests, it utilizes the 8 and the 21 EMA, and we've chosen these specific EMAs because they're so widely used. Let's first talk through the trade idea, and I'll provide both bullish and bearish setups. In this idea, we're going to go long when the 8 EMA crosses up on the 21 EMA and price closes above both moving averages. Inversely, we're going to go short when the 8 crosses down on the 21 and price closes below both moving averages. The idea here is to ride the trend. The cross of the EMAs represents a shift in trend, and we specifically want to see price above or below these moving averages so that we can utilize them for our stop loss or for profit taking. Speaking of stop loss and profit taking, on the bullish side, we want to get out of this trade on the first candle that closes below both moving averages. On the bearish side, we'll do the opposite and get out of this trade when price closes above both moving averages. Let's talk through how to script these conditions in the scanner. I'm going to turn the market scanner on here. I'm going to search 8-21. We're going to load this scan up. And here are the conditions. Now in this first condition group, the first 2 conditions here, price close greater than the 8, price close greater than the 21. Just below that, we've defined that the 8 is crossing up on the 21 on either the current candle, 1 candle ago, or 2 candles ago. So these conditions are looking for the bullish setup. For the bearish setup, that's going to be this condition group here, price close less than the 8, price close less than the 21, and the 8 has crossed down on the 21, either on the current candle, 1 candle ago, or 2 candles ago. So this is the scanner that's going to find either of these bullish or bearish setups. Let's take a look at the setups on the chart. I'm going to turn on my drawings here. Here you can see the bearish setup. We have the cross down. We have price closing below both of the moving averages, so we take a short bias trade and we ride that trade until price closes above both of the moving averages here for a gain of almost 1%. On the bullish side, we have the cross up, then we have price closing above both of the moving averages, so we enter into the trade long and we ride that trend until price closes below both of the moving averages for a net gain of 1.74%. So that's how this trade works. Let's jump into the next one. The next scanner idea that we're going to go over is an RSI Divergence Scanner. For those who are not familiar with divergence, in this case, we're comparing RSI and price, and we're looking for instances in which RSI and price are not following one another. What that means is if price is making higher highs or lower lows, then RSI should as well. When price makes higher highs and RSI does not, or when price makes lower lows and RSI does not, that is divergence. The idea here is we're looking for strength or weakness under the hood, so to speak. If price is making higher highs, but RSI is making lower highs, that can suggest weakness in buying pressure. If price is making lower lows, but RSI is actually making higher lows, that can suggest strength in buying pressure. In both instances, these divergences can signal that price might be ready to reverse. So let's talk through the scanner conditions. I'm going to turn on my market scanner here. I'm going to search RSI Divergence. And now we've got 2 condition groups. In the first condition group here, this is going to be the bullish setup. So it says that RSI on the current candle is greater than RSI 5 candles ago. RSI 5 candles ago is greater than RSI 10 candles ago. RSI is clearly increasing. However, we're making lower lows. The low on the current candle is less than the low 5 candles ago. The low 5 candles ago is less than the low 10 candles ago. So the lows are decreasing. Now we've got the bearish setup here. RSI on the current candle is less than RSI 5 candles ago. RSI 5 candles ago is less than RSI 10 candles ago while we're making higher highs. The high on the current candle is greater than 5 candles ago. The high 5 candles ago is greater than the high 10 candles ago. Now that we understand how to script it, let's see it on the chart. I'm going to turn my drawings back on here. And now we have two scenarios. On the left-hand side, the bullish scenario. We see price making lower lows while RSI is making higher lows. We enter in on the break of the high of the candle that makes the lower low. And we close out in this particular instance when RSI breaks above 70 for a gain of almost 5% on the long side. Now we see the short bias trade. We have a high here. We have a higher high, but we can see the divergence there, RSI making a lower high. We get into this trade on the break of the low of the candle that makes that new high, and we exit when RSI is below 30 for a gain of about 3.5%. Let's jump into the next setup. Next up, we've got the reversal candle on volume scan. Now, what do we mean when we say reversal candle? In this case, we're referring to any of the most common reversal candles. So that can include hammers or inverted hammers, dojis, and engulfing candles. These candles can occur throughout the chart on every time frame and in both bullish and bearish scenarios. For additional confirmation on this setup, we've also added a volume criteria, and we're looking for price getting extended from the mean, and we're using VWAP to represent the mean. When price gets extended in one direction or another and traders see these types of reversal candles forming, that can be a sign that price is about to reverse directions. Pair these candles with above average volume, a typical sign of capitulation, and you just might have a great setup for a trade. So let's talk through how to script out these conditions. I'm going to turn on my scanner here, and I'm going to type in reversal candle. It's going to bring up those conditions for me. Now I have two sets of condition groups here. In the first group, this is the bullish setup. I've defined that the price on the current candle is greater than the high of the previous candle, or closing higher than the previous candle. And that previous candle, of course, is the reversal candle. We've got volume on that reversal candle is greater than the average volume. And the close of that reversal candle is less than the VWAP by at least 1%. So it's extended to the downside. In addition, we're either seeing a hammer, a doji, or an engulfing bullish candle. In the second condition group, this is the bearish setup. We've got the price close on the current candle is less than the low of the previous candle. That low here, this is our reversal candle. We've got volume on that reversal candle is greater than the average, and the close on that reversal candle is greater than the VWAP by at least 1%, meaning it's extended to the upside. As well, we're looking for either a doji, an engulfing bearish, a hanging man, or an inverted candle. Now that we understand how to script these conditions, let's talk through those setups on the chart. I'm going to turn off my market scanner here. I'm going to turn on my drawings. And we can see the two unique setups. Now on the left-hand side, we have our reversal candle here. It's occurring on volume. It is greater than 1% above the VWAP, so we take our entry when price breaks down below the low of that reversal candle here, and we exit when RSI is below 30. We're using RSI as our exit in this case. You can use whatever makes sense for you. Either way, we make a profit of about 3.6%. On the bullish side, we have that reversal candle on volume, as we can see, and it's closing greater than 1% below the VWAP here. We take our entry when price closes above the high of that reversal candle, and we ride this trade out until RSI breaks above 70 here for a gain of 4.6%. Let's jump to the next setup. In a previous video, we highlighted some common ways to utilize the Ichimoku indicator in your trading. In this video, we're going to use it in a new way. This time, we'll utilize both the Ichimoku cloud, the Senku A and Senku B, and the Tenkan-Sen line in order to look for an early entry for a potential trend change. In a bullish trend, when the Ichimoku cloud is positive, meaning the Senku A is above the Senku B, and the Tenkan-Sen line crosses down on the Senku A, that can be a sign that price might be about to reverse to the downside. Inversely, in a bearish trend, when the Ichimoku cloud is negative and the Tenkan-Sen line is crossing up on the Senku B, that can be a sign that price might be about to reverse to the upside. With that said, let's talk through how we script these in the scanner. I'm going to turn my market scanner on here. I'm going to type in Ichimoku. And now our scan comes up. We can see two condition groups with just a few conditions in each. On the top here, this is our bearish setup. The Senku A is greater than the Senku B, meaning the cloud is positive, but the Tenkan-Sen is crossing down on the Senku A. Right here, we have our bullish setup. The Senku A is less than the Senku B, meaning the cloud is negative, but the Tenkan-Sen is crossing up on the Senku B. Now that we understand how to script these, let's see them in action on the chart. I'm going to turn my scanner off. I'm going to turn my drawings on here. And now on the left-hand side, the bullish setup. The Tenkan-Sen line in orange is crossing up on the Senkan B in red, but the cloud is negative. We enter in on the close of the candle in which this cross occurs, and we're going to exit when price closes below both the Senku A and the Senku B. That happens here. We make a profit of 5.2%. On the bearish side, we're going to enter when the Tenkan-Sen crosses down on the Senku A, the green line, and when the cloud is positive, the Senku A is above the Senku B. We're going to enter on the close of the candle in which that cross happens, and we're going to exit when price closes above both the Senku A and the Senku B. That occurs here, and we make a profit of 4.3%. Let's go on to the last strategy. Last, but certainly not least, we have a range breakout scan. One of the most common things that traders are looking for, regardless of direction, are range breakouts. A range breakout is when price takes out the high or the low of a previous range of candles. Now, the longer price stays in a range, the more powerful a move out of that range can be. We're going to keep things simple with this scan and just look for two parameters. First, we want to see price breaking above or below a previous 10 candle range. Next, we want to see that happening on above average volume. So let's talk through how to script these conditions. I'm going to go to my market scanner here. I'm going to type in range breakout. You'll see two condition groups with just two parameters in each. The first condition group, this is the bullish setup, price close greater than a 10 candle range high. We have this offset by one candle so as not to include the current candle in the calculation. Next, RVol greater than a constant value of 1, meaning above average volume. We have the opposite down here in this second condition group, price close less than range low 1 candle ago, and RVol greater than 1. Now that we understand how to script these two setups, let's see them in action on the chart. I'm going to turn off my market scanner. I'm going to turn on my drawings. On the left-hand side, this is the bearish setup. We see price closing below a range, taking out a range low. We're going to enter in on the close of that candle. And for both of these exits, we're going to exit when price gets above or below the middle of the range. For the bearish setup, we're exiting when price closes above the middle of the range. That happens right here. We net ourselves a profit of about 2%. On the long side, price taking out a range high. We're going to enter in on the close of that candle. We're going to close out when price closes below the middle of the range right here for a net profit of about 1.9%. So there you have it, folks. 5 powerful day trading scanners and how to utilize them in the TrendSpider platform. Now remember, this video comes with an accompanying blog that contains links to all of these scanners for you to use. I hope you found this helpful, and I look forward to seeing you in the next TrendSpider Technical Analysis Series video. As always, happy trading and catch you next time.